Now, recession fears in the United States are reflecting in Wall Street's meltdown since last week, with the sell-off extending to Asian markets. Wall Street saw a deep sell-off overnight, marking its worst drop since September 2022, with over $4 trillion erased in value. The sell-off was fueled by investor fears over mounting trade tensions and recession risks. This comes as President Donald Trump refused to rule out an economic downturn. The volatility index surged to its highest level since December 2023, reflecting growing uncertainty in the financial markets. The S&P 500 dropped another 2.7%, taking the index's total loss to over 8% from the 19th of February all-time high. The Nasdaq lost nearly 4%, its worst day since 2022. The index has officially entered correction territory after falling more than 10% from its December peak and has shed $1.1 trillion in value as tech meltdown spreads. In the mega-cap space, Tesla sank 15%, while Nvidia drove a closely watched gauge of chip makers towards the lowest since April. The Dow Jones Industrial Average lost over 2%. Tech stocks bore the brunt of the market decline, with the sector dropping over 4%. The Magnificent Seven stocks, including Alphabet, Amazon, Meta and Nvidia, all retreated. Tesla's plunge erased its post-election gains completely as Elon Musk faces backlash over political controversies and company management concerns. HSBC downgraded U.S. stocks, citing uncertainty around tariffs and global trade disruptions. Bitcoin-linked stocks also slumped. Coinbase lost 14.9%, while MicroStrategy dropped 17.1%, tracking weakness in cryptocurrency markets. The OG token crashed below $80,000, down over 4%. The second-ranked token, Ether, fell more significantly with losses of over 6%. The sell-off was exacerbated by a stronger Japanese yen and rising bond yields, which led to unwinding of high-risk investments in tech and AI-related stocks. Market jitters intensified as U.S.-China trade tensions escalated. China's retaliatory tariffs on select U.S. imports took effect on Monday, while additional U.S. tariffs on base metals are expected later this week. Meanwhile, concerns over a potential U.S. government shutdown added to investor anxiety. Lawmakers are scrambling to pass a spending bill to prevent a fiscal crisis. As the market correction deepens, analysts warn that sustained volatility and policy uncertainty could weigh on economic growth in the months ahead. And for more on this, the correspondent Susan Tehrani sent us this report from New York. Listen to this.
U.S. stocks plunged, Bitcoin stumbled, and the U.S. economy is on shaky grounds. At least that's what the markets are feeling. President Donald Trump's aggressive trade and economic policies has Wall Street rattled, with the S&P 500, the Nasdaq, and the Dow all seeing sharp declines. And despite reassurances from Commerce Secretary Howard Lutnick, fears of a recession are growing. What's changing? Well, fiscal policy and government spending have now taken a center stage, with the influence of the Federal Reserve fading a bit. This could mean unpredictability moving ahead. But the question is this just market noise, or should we anticipate something bigger? Susan Tehrani reporting from New York for WION World is One.